Hello, and welcome to Big Conversations with your girl T Adeyemo. It's been a minute. How are you? How is the spring treating you? I am well. I'm happy to be here, and thank you so very much for asking. And check out our spunky background. We're trying on new filters today. This is Big Conversations where we talk about everything. If it's talkable, we talk about it. You get the drift: mental health, politics, yeah, issues of the day. We will talk about it at Big Conversations, and this is where you get an in-depth analysis into issues of the day. And tonight we have a show for you. I want to thank you all for watching. Again, my name is Tia DM and you're watching Big Conversations. Could I just ask, if you're new to us, to LCC Media, that you subscribe immediately without hesitation? And as we give new subscribers, you get a check for $500 in the post, and that's not true. But please do subscribe anyhow. We have a show for you tonight. We're starting with a conversation about your taxes. It doesn't get any more practical or real than Tayo, Elnathan and Dotun Ayo-Bamisaiye talking about taxes, talking about your personal finances, and talking about your money. At 7:30, we have a conversation with the legend himself, Mr. Darren Jordan. He joins us at 7:30. At 8 p.m., we have Giselle General. She joins us with Edmonton City update, and Mary Nowak wraps up the evening at 8:20 as we talk about children and their mental health. So, without much ado, here is don't go away. Here is an in-depth conversation about his tax season, as you know, with Tayo, Nathan, and Dotun Ayo-Bamisaiye. Don't go away.
You today. So thank you, ladies. Kana. You find our content educative. So
Okay, I
thank
must
you,
say
and we
that we
hope that you
recorded
find
this
our
just
content
hours. Oops, one second.
educative.
I'm sorry, we recorded this just a couple of hours ago, and we were able to catch Tayo and Dotun, and they kindly agreed to join us. I'm just backing this up a bit. So here's Tayo and Dotun as they talk about your personal finances. Enjoy.
Money, your goals, and you today. So thank you, ladies. Kana. Canada, for having us. We appreciate the opportunity to come here monthly to share our views. And thank you for listening. Whoever is watching this, we appreciate you, because without you listening, we are not going to be able to talk much. So thank you. And we hope that you find our content educative, informative, and useful to you in your daily lives. So this is tax season still. And people have been filing their taxes since February, and this is March 25th. And some of us might have filed our taxes. And if you're like me, I haven't filed yet, but I'm anticipating that I will file before April 30th. And those of us who have filed might have been receiving refunds or notice to pay back. So we're going to do refunds first, and then we'll talk about paybacks. And so for those of us who received our refunds, let's talk about certain things that we can do for this year or last year, that we can do for this year and for next year. And those of us who had to pay back, maybe we could have done a bit more planning or not. So over to you, Dotun. I'll let you start.
Thanks for having me here. This is a very interesting conversation as usual. Taxes, it's always a pleasure talking taxes for me. The amazing thing is that we've had probably about 30 days there, about 35 days of tax filing already. And we have probably another 35 days to April 30 ahead of us. And we're about to hit the April rush. So what I'll say is this: don't wait until the 29th of April to call your accountant or to, get into TurboTax or Wealth Simple Tax, as the case may be. Try and get it done before the middle of the month. Not because it will increase or reduce your refund or increase or reduce how much you have to pay back, but because you have time to think through it and make all the claims that you need to make for the year. one thing that's always interesting is people find out after the fact that there are opportunities to save on taxes which they have not taken. And part of what we want to do tonight is ensure that you are taking all those opportunities, right, Tayo?
Yes, yes. And just a quick shout out for those of us who haven't filed our taxes, and if you are of the modest income sort, you could go on the CRA website and find a list of low income, modest income tax clinics, and you can file your taxes there for free. Okay, so go on CRA website and they'll let you know where. Shout out to LCCMedia Foundation, sister company to Ladies Corner Canada. They offer a free low-income tax clinic, modest income tax clinic, if you like to file your taxes for free. So reach out. It's on the CRA website. Call, text. I don't know the phone number off the top of my head to call.
No. Okay, so this is how we're going to do it. Now, ladies, LCCMedia Foundation is a not-for-profit registered in Alberta. Focused on financial literacy and all things money. And they are operating a low modest income tax clinic out of two locations principally. One in Edmonton, and then one in Calgary, and then in Edmonton as well. So if you earn less than $50,000 per annum as family income, you can show up at the Calgary Full Gospel Church, 917 14th Avenue, Southwest Calgary, where you on Tuesdays, Wednesdays, and Thursdays between 10 a.m. and 3 p.m. I think that actually 5 p.m. last appointment is for 4 p.m. And you can have your taxes done for you for free. The same service is being provided out of the Africa Center on Thursdays and Fridays from 10 a.m. to 5 p.m. as well. And if you are, like Tayo said, of the modest income caliber, then yes, you can show up there in person or book an appointment by sending an email to taxes@lccmediafoundation.ca. These are ways that we give back to the community, and Dexteritas is proud to be able to say we support this initiative. Yes, that was me.
I couldn't have said it better. You said
I know.
So beautifully. So back to our topic today. Taxes you filed, you're expecting a refund. What next? So when I file taxes for people and they're gonna get a refund, I'm like, until you get the money in your bank account, don't spend it. Don't spend it. Don't even think you have extra money, right? Because if you spend it and then CRA reassesses you, or they find something that you might have forgotten to declare, something shows up somewhere, you're not going to get that amount.
True.
And so if you've planned or you already spent it, don't be like me. The very first taxes I got back, I think I probably called Africa and said, yeah, buy me that land. I'm going to buy me that land, I'm building. And then they reassessed it. I'm like, about that land, return it to the owner. And there was a bit more conversation than that. I'm being very simplistic about that right now. But so the first thing I'm going to say, don't spend it until you get the money in your bank account. 2, what are your plans for the refund you are getting? Right?
Well, I have a few suggestions. Number 1, RRSP contributions for 2023. Hey, it's March. 2023 RRSP contributions, you can make them, and the banks opened up to receive them from the 1st of March 2023. And you're going to be able to make those contributions between now and the end of February next year. So if you got a refund and you have a healthy contribution room, then one thing that you can use that refund for is contribute towards next year's RRSPs, so that you're already beginning to save on your tax bill. That's all needs to start.
That's beautiful. In addition to RRSP, I met with an insurance broker not so long ago, and they mentioned about, was that universal life insurance, to take a look at that. And I've always known about universal life. I'm not talking about insurance here because I like to leave the specialties to those who know what they're talking about. However, if you don't have life insurance, for you or your family or your children, you might want to take a look at that. Life insurance is important. I know life insurance is sensitive because it's almost like, I still have a long time to live. I'm not gonna die. It's not just about payout when you die. There's a lot of things that life insurance can be used for. There's also options where you have a cash, not a cash surrender value, but if you can 20 after like 20 years as a term portion are able to take money out to supplement
That's a
your
cash surrender
income,
value.
cash surrender
Cash
value,
surrender value, yeah.
you're able to use it as savings, some kind of savings. You're also able to even have some for your children, and you contribute life insurance for them where it's still cheaper now. Because if you have life insurance for your children, you pay up on it now. By the time they are able to take it over, it's cheaper right now, right? And so those are conversations that you might want to have with your refund about setting up yourself in a way where you're able to wealth transfer, wealth generate. It is a way to ensure your wealth, life insurance. And there's also some of the options where they give you, say, critical illness benefits. So if you fall sick, they pay you $25,000, $50,000. Of course, find a licensed insurance broker and sit and make informed decisions. I'm not by any means associated or affiliated with any insurance company, but I am saying that if you have children, if you have properties, if you have investments, having a life insurance, having an RRSPA contribution are good things you could do with a lump sum refund that you are getting back in this period. I know it is interesting because as accountants, you're like, yeah, I'm getting money back. And I'm here downing you with how to sensibly invest the money. I know it's unfortunate, but our job is to suck as much happiness away from you so that you remember us.
No. I disagree. I disagree with that. It is not our job to take away your happiness. It's our job to ensure that you are making the most of the money that you have.
Okay, that's what I meant to say.
Mm-hmm. No, that's not what you said.
That was a joke. I was saying that to allude to the fact that if you ever watch Mary Poppins and all the bankers at the stern, top hats and glasses on there. Put your glasses down, Dotun. Put it right on the rim, right there. Yes, like that. And and yes, and they had that serious look, and they were telling this boy, invest your tuppence. And that's what I was alluding to. But yeah, so we don't have a lot of time. So what else can we do with a refund?
I think at this point, if we're looking at from a tax perspective, if you have a contribution room, making an RRSP contribution is a good idea. If you don't have a contribution room, either because you have fantastic employer matching or something like that, then you can put that into a TFSA and let it grow tax-free. That's definitely another good use of the money. As long as you are thinking investments in financial instruments, a TFSA is a good idea. I will not say I do not know much about the real estate market and property, so I can't really speak to that. But when it comes to things that you can do from a tax perspective, putting money into a TFSA means it does not change how much your tax bill will be next year, but it definitely means that however that money grows, whatever it grows to become is yours to keep. The CRA will not be getting anything out of it.
That's interesting. Yeah, I like what you said about, the real estate investment and all that. One thing I'm going to also want to add in there is there's no investment with, I guess, bad credit. So if your credit is, or you can invest better when your credit is greater.
Mm-hmm.
You see, so if you have some weird credit cards or some debt there, maybe this is the year to put a plan in place to bring one down and reduce your interest expense.
In fact, let's just take a deep dive into that, straight out of taxes into personal finance. The fact is the economic situation has not made things easier. Interest rates, we had 4 rate hikes last year. The US recently dropped rates. The Bank of Canada, I think, was supposed to either hold or something like that. But the fact is, we've all been on the receiving end of flying inflation, food inflation in particular, even though all the big retailers say that they have nothing to do with that the price increase in the price of food has nothing to do with the massive profits that they made in 2022. But it still doesn't change the fact that, you know what, we are on the receiving end of this. And this is a time as good as any to say to revisit your financial situation and take a look at your investments if you have any. If you don't have any, take a look at your debt, because it's either you are making more than enough to sustain your lifestyle, or you are not making enough and you are supplementing with debt. And the implication of that is you are digging a hole. So in the words of a friend of mine, if you find yourself in a hole, the first thing to do is to stop digging. Now, if you're going to stop digging a financial hole, then that means you're going to stop going into debt. To avoid going into debt in these current circumstances, under the current economic situation, then you need to look at, okay, how can I improve my earning capacity? What can I do to make sure that I have more money than month? Because the reason why most people are going into debt at this time is because there is more month after the money is done. So you are looking at, okay, what are the things that you can do? Should I be considering a career switch? Should I be looking to ask my boss for a raise? Should I be considering changing jobs? Or should I be considering moving provinces? Depending on where the jobs are and where the money is, it becomes critical that we have those conversations and begin to think about that. So I said earlier, the first thing to do is to stop digging. And for you to stop digging, you still need to be able to pay your bills. So take a look at your earning capacity. In addition to that, like Tayo said, if you have a refund and you have debt, particularly credit card debt, then that's one very good place to put it, because paying interest on $10,000 at 29% per annum means that you're paying $2,900 in interest every year, and the balance on the debt is not changing. That means you are giving away $2,900 to whoever provides that funding. In 4 years, they would have taken the $10,000 from you, and you would still owe them $10,000.
Sorry to interrupt you. CIBC, I think, puts it best. Can I mention their name? And I think on the statement it says it takes you 10 or 20 years to pay down $2,000.
Because you are making the minimum payments.
And minimum payment, I think it takes 10 years or 20 to pay down $2,000. And that's every time I say that, it gives me the EBGBs, because I'm like, $2,000 on the day of shopping. It's going to take me 10 years. I'd have overgrown, lost weight, gained weight, lost weight, gained weight. Sold it, bought it back on the 2000, and I'm not yet done the debt. So wow, that's scary. Oh yes, another thing you can do with your refund is for those of us who might have tiny little kids and you want to go to Disneyland. It's easy to just take their refund and go for travel, or plan your next vacation for your mental health. It's important. This probably be the one time you might have a lump sum payment coming to you in the year, and you want to do something good this year. Plan the trip now.
I'm not saying anything about that.
Why is that wrong? People can actually.
I didn't say that it was wrong. I just said I'm not saying anything about that.
Some people have 3 kids and their children go to camp, and some of camp experience might be like $1,000 or less. You have a nice refund, put it towards it now, so you don't have to worry about that or put that on your credit card. Right? It's all about planning ahead. The fact that you don't have the money won't stop the children from asking you that they want to go to Disney.
True.
So
100% true.
So if you have a lump sum amount coming, it's money you've spent you weren't really expecting, but you know it's going to be there anyways. Put it towards a trip, a summer vacation trip, a spring break season, or in the summer. Put it towards something like that. That way it's not affecting your budget for the year, and then you're able to be like the hero parent. Oh my God, my mom, my dad took us to Disney, and you're like, yeah, like super mom, super dad. You see, and you feel great. They feel great. Everybody's happy. Life is good. And for those of us, I don't think we have a lot of time left anymore. For those of us who had to pay a refund, you've made a lot of money and you've had to pay back, not a refund, I'm sorry, you had to pay back money to the government. How do we do that, Dotun? What's the...
That is always simple. If you have a one check, one single one single T4, and you find yourself in a situation where you are paying back, then the first thing to do is make sure that, one, you are maxing out your RSP room for the next year. Plan to do that. In addition to that, find out if it's possible for your employer to take additional money off your paycheck so that you don't find yourself owing. Now, most of the time when you're owing, it's either because your employer it's either because you've earned from more than one source. So imagine a situation where you earn where you make $100,000, but two employers have paid you $50,000 each. They both deduct the taxes as if you are earning $50,000. But the sum of those two add up to less than the taxes on $100,000, which is why you may find yourself in a position where you're having to pay taxes, even though your employer has deducted. So with that in mind, with that kind of situation, if you find yourself in that kind of situation where you're earning income from more than, one source, and both sources are at a lower tax bracket, you most likely will find yourself owing at the end of the year. So it becomes critical that you are considering making an RRSP contribution or having your employer, one or both of the employers, take a bit more taxes off so that you don't find yourself in a position where you are having to pay out at the end of the year. It's one of the more painful things I've had to do in my life, which is go find a way to pay back $15,000 in taxes as a result of under deductions. At the time for me, it was because I was contracting. Yes. So do you have any thoughts for contractors and self-employed people?
Oh, yes. I was going to talk about that. One of the biggest issues I've seen with contractors and self-employed people is they don't keep their documentation properly. So you're a contractor and you're making this money, and you get a T4A or not, I don't know.
T4A, yes.
You get a T4A if you have a T4A or not. And what it is when it's time to file your taxes, you would not itemize all your costs that you've spent out, and you've not been diligent about keeping your costs. So if you sit in front of me as an accountant, if I don't see proof, it's difficult for me to, most likely I won't, I'm not going to take, oh yeah, I spent $5,000 on and $2,000 on, there's got to be something backing it up, proof. And so what is happening is people don't keep proof. I paid somebody $5 there, I bought $3 there. So the point is, keep your proof. If you're self-employed or you're a contractor, keep proof. Buy a software, right? Buy a software, Wave, Zero, QuickBooks, Google Drive,
Sheets, Excel.
Excel. Take a picture, save it. Take a picture, save it. So that when it's time, even at that time, you're like, this is a lot. At least you have the proof and support there. One, the CRE might come asking for it. Two, it helps you better plan for your taxes. We need to come away from this whole idea that we won't plan for things and things would happen. It doesn't work that way. If you don't plan, if you fail to plan, you plan to fail. Simple. As much as that sounds very cliche right now, it's very true. And every one of us suffers for it. Like we do. Like I do that all the time. When I don't plan for something, it simply doesn't work. And so I think the biggest thing I want to say in that regard is keep your documentation, keep your receipts, keep your costs, everything, your car expenses, your house expenses, whatever it is, your home office expenses, the supplies, you pay somebody,
Meals and entertainment, training and education, tuition, donations,
meals, food, travel, I don't know. Everything you spend on the business legitimately, keep it together in one spot. Even put it in a Ziploc bag and bring it.
Even though I don't like those guys, I'll take those guys over the guys who just say, oh yeah, I spent $5,000 here, I spent $3,000 there, I spent $2,000 there. Yeah, that's $10,000 in expenses. And I'm like, sorry, what? Yeah.
It doesn't work that way. Yeah. So yeah, keep your proof. And if you're struggling with that, you know what? I'm rooting for all professional services provider like we. And I think one of the bigger professions that people don't respect is accountant, because people feel they can do it. What is that? I would just do it myself.
contribute to next year's RRSPs,
plan for next year, so contribute to next year's RRSP, or put it in TFSA to watch it grow so you're not paying back. If you owe money, know why you're owing money. Let your accountant or whoever prepared your taxes tell you why. What cost me to owe money this year? Didn't deduct enough taxes. And then you go figure out how to get it done properly this year so that you don't have to owe taxes. If you need to refill out your TD1 form, TD1AB, go back and do that and take out the extra money. Or if you're working, say like Instacart, or what's the other one? Instacart, Keep the Dishes.
the dishes, DoorDash,
and they don't take out taxes from your earnings. Take a bit of your payment earnings, say 200 or 300, put them aside every month. Right, put in a savings account. Just like if you have a business and you have to pay back GST, open a savings account and move your GST amount every month. If you know that cash flow is going to be a problem for you, right, when it's time to pay GST or when it's time to pay your taxes, so save it there, forget it there. Just every month automatically withdraw $250, I don't know, $100, $80. It's better to have done that. And then at the time of tax, they're like, oh, no, you don't owe money. Like, oh, that's good. It's still savings, right? It's a tool for savings. Than to need it and not have it. So none of this we're saying is necessarily new to anybody listening, I think. But I think that if you've forgotten, it's just more food for thoughts for you to kind of plan your taxes and give yourself one more step towards financial freedom, right? And that's what we're here for, to help you achieve financial freedom. One thing we'll let you know that is that nothing just happens. You're going to have to do something. And this is still March, first quarter. You can still do a lot in this year and achieve your goals. My save was a down payment for a house. That might work also. Or your second investment property, right? Or pay down debts, or do a lot of things. So don't be like me, who thought that the tax refund should be used to step down, quote and unquote.
So with all these beautiful things that we've mentioned, we just want to say thank you for listening to us. Thank you for paying attention to Ladies Corner Canada. And if you are of the modest income type, low or modest income, we can do your taxes for free. Show up at the Africa Center in Edmonton or Calgary Full Gospel Church in Calgary, Tuesday, Wednesday, Thursday between 10 a.m. and 3 p.m. In Edmonton at the Africa Center between 10 a.m. and 5 p.m. or 3 p.m. as well, as the case may be.
I think it's 3 p.m. for Edmonton.
Yeah, and you can find this information on the LCCMedia Foundation website, as well as the Ladies Corner Canada website.